Good morning. Happy Monday. All right, so team, there's a few things to go over today. I wanted to do this video over the weekend and just didn't have time to get to it. So here Monday morning, first thing, before things get too crazy, I want to give you an update as to what's going on. Why do mortgage rates continue to go higher? Why is real estate demand so off the charts? I'm trying to buy investment properties in Southwest Missouri, and homes are selling so fast. It's pretty much immediate. It's almost first one to full price offer gets in. A little bit different market there, but why is all this happening? And ultimately, what's going to happen next? I am optimistic in the short run for sure on interest rates, but right now it's not pretty, at least in comparison to what it's been. So let's take a quick look. So I'm going to show this to you here. We're going to go in, going to go full screen here. And, I think probably the most important thing, let me see, do I have my drawing tool set up? I think I do. So this is mortgage bonds, right? And the cheat here is always, okay, I don't have it set up the way I should. Sorry, team. This should be selected. No. This is what happens when you're a high school production. All right. So you can see here, mortgage bonds, the trend has definitely been lower, which means the trend for mortgage rates has been higher. Okay, as the prices go down, the yields go up. That's how the mortgage bond world works. And you can see here, and this is each one of these is a day. This is just going back to the beginning of the year. So I just went back to the beginning of the year. We're talking about 6 weeks here, but you can see there's been a significant decline. We were up near 104. Now we're down near 101.5. That's 250 basis points, or the reason why rates are 0.5% higher. Now, a lot of people aren't talking about this. Again, one-man band issues. Okay. So when we look at this, we can see clearly that the trend has been lower. But what's scary is this level right here where we are right now, this really needs to hold. Otherwise, we're going to lose another 50 basis points or whatever this is down here. And, we don't need to lose any more ground at this point in time. We really need this to hold. Right now, we're actually below that important support level, but you can see we've traded even lower. We need to really close above this line, this red line right here today. That's going to be important. We'll see what happens. So as rates are going, why? Why are mortgage rates continuing to go higher? Well, the problem is, and like many of the people who are investors now, they believe that stocks and real estate only go higher. In fact, if you follow Dave Portnoy from Barstool Sports, who now does Day Trader Global, I think the guy's hilarious. But literally, the motto for that organization, that day trader organization, is that stocks only go up. So there's people who believe that stocks will only go up. There's people who believe that real estate will only go up. And both of those camps have the data to back it up. Long term, they're both correct. They will go up. And so what you're seeing people getting away from this idea of needing a safe investment. Who needs a safe investment? Who needs to buy bonds? Bonds? You want to make 1% or 1% on your money? Are you kidding me? Look at the returns on real estate to 10% a year for 10 years? Look at the returns on stocks. Both real estate and stocks have been pretty much straight up for 10 years, a decade. So what that has done is it has built a mentality amongst everyone, including new investors who haven't had their ass kicked yet. And trust me, if you haven't earned your stripes in the stock market, you will one day. There's no avoiding that. If you're going to play around in, the Shark Tank, you will get cut eventually. But I'm not going to go down that path right now. We're talking about why are mortgage rates low? Because bonds, there's just no favor for it. There's no one sees the need right here to be super conservative. When we have inflation, we have prices running away on both, hard assets, real estate for sure, stocks, pieces of paper. You have SPAC investing going on. You have Bitcoin going crazy. There's so many different places to invest and get immediate gratification. Why would you look at bonds? And so you're seeing an exodus right now in bonds because people realize that they're not getting any kinds of returns there. And there's lots of other places to go get returns. Also, one of the things we're seeing people hold on to the house that they normally would have sold. So a lot of people, the old strategy was you bought your first house And then once you had some equity, you sold that one, use that equity to buy a bigger house or, your step up. Now what's happening is people are keeping that house. So instead of selling that first house, they're keeping that one because money's cheap and, you put a little bit of money down over here. It's okay. I'll pay some mortgage insurance. We still have a good deal. So a lot of people are holding. A lot of people own multiple homes now. I will say from experience looking, back 10 years, if you were to talk to the average person, average home or John Q homeowner, let's say, that person did not own multiple homes. Now I would say it's actually very common for people who are applying to buy a home, veterans or non-veterans. I mostly work with veterans, Derrick Evans, NMLS 155010. But everyone, a lot of people, I would say almost half probably already own a home. Now there's a lot of first-time buyers still that are part of the pool, but I'm talking about anyone who's not a first-time buyer. A lot of them are going to keep the house that they currently have or already have another house. And so we have people owning multiple homes. And look at what's happened. It's been great. If you bought a house in the last 10 years, you've done great. I'm sure there's some people who have had the one-off here and there, but 99%, let's say, of people who bought a house in the last decade, they've done great. It's worked out well. It's worked out really well. And it continues to. If you bought a house a year ago here in San Diego, you've made good money. There's people who are in escrow now about to close. From the time they got into escrow until the time they closed, the house went up in value a significant amount. So that's the reality of what's going on here. We talk about what does inflation look like? Inflation really looks like a smaller group of people getting rich while the majority of people don't know how to do it. And, homeownership is an easy way, into this, the easiest way. But this is what, where you see a lot of people get really rich and a lot of other people who are hardworking people who just rely on their 3% annual pay increase and maybe a 401k. The 401ks have been doing great too. I mean, look at that. If you just do that, simple stuff. But this is the reason why bonds are getting hammered, because too many other investments are just way sexier. And so bonds are getting hammered. Let's take a look, see if I can pull this off, because obviously I'm having production issues today. As a one-man band, I do my best. This is the 10-year. Okay. So I remember, talking to people, let's call it old school investors, let's say. And would be people like your grandparents or maybe your parents about investing in stuff. This is the 10-year, which is 10-year treasury. So it's government debt. And you can see this is going back actually to the end of November. So this is going back all the way to November 30th here. And you can't see that because my head's in the way. But if you look at this trend, you can see that it's been higher. Okay, rates going higher since November. Now the 10-year doesn't exactly track with mortgages, but we look at it because overall an investment in a 10-year treasury is very similar to an investment in a mortgage bond. The 10-year treasury is more something that's accessed by people who are more retail oriented through funds and such, or other governments and so forth. Other governments in different countries where they may have a negative yield or a smaller yield can sell their bonds and buy U.S. bonds. There's all sorts of flips like that and different things that people can do to make money on a big scale. But for us, John Smith investors, like all of us are, we look at this and we go, okay, so what is it? 1.35% or whatever it is right now, 1.33%. That will not cover inflation. So it's basically a negative yield, even though it doesn't say it's a negative yield. If you put your money in that, it's technically decreasing over time. That's not good. And this is up. Look at where it was, and this got as low as like 0.35. If we go all the way back down on the chart, and that's when rates were really, really low. The reason why I'm optimistic is because we are at a pretty big ceiling here that we haven't touched in a long time. I do think this 10-year will retreat from here, at least hoping so. And I hope that will help lead the way for mortgage bonds. The mortgage bonds investments are typically more institutional traders, institutional investors. The retail guy is not really involved in the mortgage bond game. You have the Fed as a huge buyer in there. You have, big institutions in there. In fact, there was in downtown San Diego at one point, there was a firm that was called Mortgage-Backed Traders or something like that. They were trading mortgage bonds. Now you need major cake to get into that game. I mean, tens of millions of dollars. You and me can't get into that game. They won't let us in. We would have to go raise a bunch of money somehow. You can't go play that game. Nor do you probably want to, but it's the big boy game. Bonds are the big boy game. The T-bills, these treasuries, that's a little bit more of a little guy's game. And it's a little bit more realistic of the overall sentiment. Now, the purchases are made by big funds, but that's driven by the actions of people who are in the market. And everyone who's made the decision to switch out of, treasuries or bonds, investments in general, and into the market, it's worked. So people are getting trained that it pays to be risky. That's the long-term risk overall here with this thing, is that if people get to a point where they believe that, stocks only go up, like they tell you at Day Trader Global, love Dave Portnoy, but dude, that's a recipe for disaster. You're telling people the stocks only go up. He says, I believe over long periods of time, stocks only go up. Here's the catch. Okay. Yes, stocks do go up over time if you look at the charts. Yes, real estate does go up over time if you look at the charts. There is no arguing that. But the question is, do you have the stones to weather the bad times? If you do, you will win. If you don't, if you blink and you get out, then that's when you have the chance to lose. A lot of people say, well, you make your money when you buy something. Not true. It may seem that way. Well, we bought it right. But if you sell it wrong, it won't matter, will it? It's much more about selling it right. And so here we are in a situation where pretty much everything's going crazy. Everything. Boat sales, car sales, home sales, retail online sales are nuts. Money seems to be growing on trees. These are some of the consequences when trillions of dollars are printed. But is there a silver lining in this? Yeah, remember, for the last 10, 11 years, ever since I started my radio show, we've been saying, buy a home. And it just so happens to be the perfect time to have done it back then. Whether you invest, there's multiple ways to invest in real estate. I'm going to make a separate video about that. Today was why are mortgage rates increasing. That was the purpose of this. So now we understand that, okay, because mortgage bonds are just not that great, not that sexy of an investment, not in a climate like this. Well, could that change? It sure could. But notice every time the stock market looks like it's going to peel back a little bit, opens up down 200 or 300 points, what happens? Comes right back. Intraday. Like we haven't really even had like a bad down day. And most people believe the stock market's going to continue to run. We have a situation right now where big companies are really, really poised for success. They can kind of do anything they want. They can raise tons of money if they want to. They can get super cheap loans if they want to. They can invest in so many different things. They can do so many things that they're in really good positions. This is the reason why, full disclosure, I've made huge investments in AT&T, Verizon, Chevron, ExxonMobil, IBM. These big blue chip companies who have tons of cash and pay big dividends, I think are great investments because they give you a little protection. If the stocks get hit, right, if the market gets hit, there will be a fleet of those dividend type companies. And in the meantime, these guys have tons of cash to invest in different ways and make money. And there's tons of different ways to do it right now. So that's the reason why mortgage rates continue to go up. Don't ignore this. Educate your clients, educate your friends, share this video, let people know what's going on. Okay, rates are still really good. FHA, VA rates are still in the twos, okay, even for people with lower credit scores. So we're still talking in the twos here. We're not talking like rates have gone up to 4 or 5%. Conventional rates creeping up towards 3, in the threes for people who don't have perfect credit. Jumbo rates, though, also in the threes. So you have, for people with good credit, you have opportunities here to get a great rate still. Even though rates have gone up from the all-time lows, doesn't mean that rates are high. So that's important to note. But also, let's not ignore this. We can't ignore what's happening. Don't do that. If I remember anything about the crash, it was the ignoring of obvious information. The first wave of foreclosures came, and it was in like 2006 or 7. Now, the crash didn't happen until 2008. Why? Because we all ignored it. We all went like, oh, those are just foreclosures in Alabama or whatever. Yeah, it's nothing to see here. Let's not ignore information that's right in front of us. that could be pertinent to helping us make decisions, helping us decide if it's the right time. Let's just be smart about it. Okay, there's still opportunities. Hey, listen, I still locking refis. People saving tons of money. So there's opportunities, but let's be honest with ourselves about this stuff. Okay, so that's why mortgage rates are going to go up, or why they're going up, why they've gone up, why they may continue to go up. But I think in the short run here, we're about to see potentially a good opportunity to lock. Hopefully this week. Hopefully we'll see that 10-year come in. Hopefully mortgage bonds will follow. We're going to see a lot of hopefullys there. But that's just kind of the state of where we're at with this market. So share this video. Let me know if you have questions about VA loans, or if you have a veteran who needs help with a VA loan. That is what I do. That's what I'm here for. That is what my passion is. And I'm happy to help them and help you make some good decisions in that regard. Share this video, and I'm going to get to work. See you guys soon.